So you guys can see this article from Yahoo Finance. They pulled it from the Motley Fool. They're asking the question, are you going bargain hunting? If you are, maybe PayPal is the best beaten down stock to buy in 2024. But, as they always got to insert, but or if possible, could, but only if you believe one thing. Now, this article was written by Neil Patel. All right, so one person. So let's not barrage the Motley Fool in what one person writes. This is just his opinion, and we'll see what we think. So let's just go ahead and go through this article, put our commentary off of this article, and then as always, like if you've been a follower of my channel, you already know that I don't pay attention to what these people have to say, because ultimately, this is the people that I listen to, the ones who create the market. Now, going to this article. Okay. Not all companies have rallied amid market enthusiasm. Just look at PayPal. Shares of the digital payments pioneer are down 81% from their peak price. In 2023, they dipped 14% as the NASDAQ surged 43%. So yeah, it's underperforming. Okay, cool. It goes through, give you your boldest arguments. Okay, cool. I really don't care about that. Where the uncertainty is. Before you rush to buy PayPal shares, there is a key factor that adds a lot of uncertainty to the mix. And that's competition. Again, that's a negative thing. Maybe it's negative for PayPal, but it's a positive for the consumer because it forces PayPal to do things better, more efficient, innovative, so that the consumer can get a better experience. Now, maybe PayPal ain't up to the task to do that. Then if that's the case, then yeah, the market's not going to go up in PayPal. But understand that the consumer will be protected because there will be other businesses, products that they can use to get what they need to do done. Right? I pointed out network effects giving PayPal a strong position, but the payments industry is so huge, lucrative, and crowded that investors must always think about the constant threat of disruption. Okay. PayPal might be the most widely accepted digital wallet in North America and Europe, but Apple Pay and Alphabet's Google Pay are quickly ascending up the ranks. From my experience, I always use Apple Pay when it's available, either in-store or online. The tech titan controls a top mobile operating system, which helps it front-run competing payment services. Now, can you see the problem that PayPal is in? Because what is it that Apple and Google have that PayPal doesn't? They have a user base, a massive user base that they use other products and services that Apple and Google both utilize. PayPal doesn't have that. Like, what other product, service, software does PayPal have that has created a community of consumers that only go to PayPal? Right? With Apple, they got so many other products and services. They got even hardware that people continually go there to them. They created their own market, is what I'm saying. Apple, Google, they created their own market that they can continually sell things to. PayPal, on the other hand, they don't have that. So yeah, from that perspective, that's not a good thing for PayPal. So maybe in order for them to be competitive, they might need to create their own market to where people want to go to PayPal for things. Okay. So pretty much it looked like Neil is trying to tell us that competition is the negative thing for PayPal. And if you believe that one thing, then you don't think that is a bargain right now, because you suspect that it's going to continue to go lower because competition is going to get fierce. And it's going to underscore the capabilities of PayPal and push the value of the market lower and lower and lower, especially if they cannot innovate in time. So they do have a small window in order to make sure that people come and stick with PayPal. Now look at this article. Look at these comments from this article right here though. First one, a lot of trolls on this article with no intelligent comments. The one thing I believe is in Alice Chris. Like, that's one thing you don't do. From my perspective, you don't put all of your belief in one man or woman. It's ridiculous for you to have that much belief in a person to which he has no control over what happens to the competition. Especially if he has shareholders or a board of directors that he has to please. His hands are tied. But according to Kevin, he has belief in this dude. He is a proven executive and has made decisions to prioritize programs at PayPal. The article states competition may be a problem. Competition is a good thing. Apple Pay and Google Pay better. Let me see if he wrote too much, because I'm not going to read all that. Apple Pay and Google Pay better watch out. The largest fintech company in the world is going to keep producing with 25% of the world's business. It seems to me like this comment, Kevin works for PayPal. So he's trying to keep the perception in a good light for the business. So yeah, Kevin, whoever you are, I suspect that you work for PayPal because you only say positive things about the company. PayPal, the method everyone has but never uses. That says a lot. Yeah, you got access to PayPal, but it's not the first thing that comes to your mind to do payment services. Maybe that's the first thing PayPal needs to do, is to create some advertisements, some promotions that get them in front of people's eyes to where their mind automatically goes to PayPal first. Bradley, I bought PayPal a few years back when it dropped from $280 to $201, buying the dip. After that, it just kept going down. Now you so-called stock analysts want people to rebuy this stock. How many times do you want people to lose on this stock you are pushing? No. Nobody pushed the stock. They only provided their opinion. You ultimately were the one who pushed the buy button. And apparently you listened to someone because you continue to buy the dip. No one told you to buy the dip. And that's one thing a lot of people on YouTube tell you though. I've seen a lot of videos produced on YouTube where people have came up with this mantra of buying the dip. And I've always said, well, what if the stock continues to dip though? And it looked like this person was caught in that same situation. You don't buy the dip. You only buy when the market stops dipping. Where the uncertainty is, the stock only goes down. There's a reason fool is in the name, just saying. Yeah, that's all you're just doing is just saying. But let's get back to the market, because this is where we concentrate. This is where we provide our analysis to what the overall market is thinking and not just what Neil thinks. So I didn't drop a price prediction on my last video in PayPal, but we identified a couple of areas that we were going to focus in on, namely these buy zones down here. So earnings came out and the market in PayPal did not hold this first buy zone. Cool, no problem. But it did hold the second one. Okay, cool. I like that. So we may actually see PayPal give us a small run to the upside off of that one reason alone, because there was a lot of volume produced at the earnings and the market still held $56 for support. Okay, cool. Let's look at this on a different time frame. Here it is on the 2. There's a lot of consolidation going on here in this range. And as you can see, price is not necessarily reacting negatively to it. So maybe the buyers are there buying. You can see it here that this is also, look at where the majority of the price action is occurring. This is occurring above $57.50. That's where a majority of the price action is occurring. That again is telling you something. Here it is on the 3. The market following the earnings release after this 3-day bar. Look at the price action. We should have seen the market in PayPal go lower off of that 3-day bar, but instead it's still consolidating. It's moving, it's trying to go up. Here it is on the 5. PayPal on the weekly. Here it is on the 3, 5, and then here it is for the month right now. So again, there's still a lot of uncertainty for the long term of this stock. But on the short term, I can see the market in PayPal trying to go up. My concern is this area right here though. That's the sell zone. We need to see the market in PayPal break that to the upside in order for us to really see the market run up. Okay, have to see that. And then this would be my next target right here. So yeah, I'm looking for the market in PayPal to go up, but I'm not that bullish though. I'm just going to keep it real. So the targets that we're going to look forward to is this first zone here. Either the low or the high. It already tested yesterday, but at the high at $60.58, that gives us 2.09%. My next target is going to be at the second sell zone, either at the low or the high. At the high, it gives around 5%. And then our third target is going to be right here at the open prior to the earnings release. And that's around what, 8 3/4. Now, if you don't see the price in PayPal break these zones to the upside, these two, then you've got to begin to question, okay, what is the market trying to say now? Because apparently there's trouble to where they cannot break through all of that selling and the market will begin to go down. Go ahead and give me your thoughts. Make sure you maintain your profitability. And as always, trade different.